All right, everybody. Oh, counter restarted. Let's go ahead and jump in. We've got a very hot, relevant topic that we'll be discussing today. Ton of interest in it. I think it's going to bring a lot to the to buyers that have been priced out of the market due to values going up, and be very attractive to those that are looking at high interest rates. So we're going to talk about loan assumptions, why they're kind of the secret tool that is seldom talked about, and then what type of loans can be assumed, why assumptions work specifically in today's time and in today's market. It's a little unique time, probably a once in a lifetime, certainly once in a generation type situation. Then we'll get into some of the pros and cons with our co-host in regards to all these topics. So let's go ahead and bring Chase in. Hi, Chase. How you doing?
Well, I'm doing well, Jerod. How are you today?
I'm good. I'm good. I'm wondering if we're gonna be contending with the mower today, the lawn mowing service today.
They seem to have moved on, so I think we might be good.
Good timing. I know every once in a while we have that struggle. So, yeah, thanks for coming on today. This will be a very interesting topic for sure. I will say before I get to the housekeeping stuff that this is one of those things that just highlights where your heart is at in serving clients. Because if we're honest, as an LO, a loan originator, this isn't, your, uh, it's not your responsibility, and not often what you do on a day-to-day basis, because it goes directly to the loan servicing company of the seller that has the house. So you're actually setting aside, kind of your best interest to help folks out, to help them find um, a loan at a good interest rate and making a good assumption. So I just say all to say we appreciate you looking out for the best interest of the client.
Absolutely. Thanks for that, Jerod. And yes, like that's it's that thing in business, right? Where you try to be the best person you can be and put the client first.
Hmm.
And if you can help people get in the home, no matter what the instance is, whether I'm getting, paid for that or not, it all comes back to you. Like I'm a firm believer in that. And that's how I like to live my life. So,
Yeah.
yeah,
Yeah.
and I know you do as well. So,
Well, that's where a servant's heart should be. So let's go ahead and just get some housekeeping stuff done here real quick. For those of you that I haven't met, my name is Jerod Lee. I'm the associate broker and team lead here at My Home Connection MHC Realty. Our sponsor for today is the perfect home buying process. We've spent the better part of the last couple of decades developing out a system and a process to help you, get tools that you need, save some costs, get some reassurances in the home buying process, from market reports to relocation and lifestyle guides, to podcasts. And we love to share secrets, things that you as a consumer, should know when you're out in the field, that are often, or I should say, often not talked about or seldom talked about in our industry. So we share those. And currently we have a promotion with Chase and Summit to help us bring to you up to $500 at closing on your appraisal costs and on your home inspection. So if you have interest in learning any more about that, please just feel free to reach out to us either in the comments below, or you'll have our contact information. So with that, I'll bring Chase back on. Let me pop up here to, the main topic is, just so everybody understands, is the actual assumption process. It's amazing how many questions I get in what that means. And, I think if you want to, do you have a succinct definition in your opinion?
I think it's just the word itself, right? Like you're taking someone else's loan and you're assuming that that new liability, right? Like that debt that becomes yours.
Yes. So it's the
Comes out of their
interest
name,
rate.
goes into
Oh,
yours.
go ahead.
It just comes out of their name and goes into yours, and that's the easiest way to define it.
Thank you.
There's obviously a lot of things that go into an assumption, um, but the key now and why it's so important is there were so many loans done, through COVID, in the 2 and 3%, which we may never see again, because that was, historically the low ever. And so the assumptions, being able to assume a loan with that kind of interest rate in today's market, could be extremely beneficial.
Yeah, and I think, the assumption is that interest rate that we're talking about, that's kind of the first draw.
Hmm.
What's attractive in the assumption process, it's the remaining term of the loan, however years the sellers are into it. And then obviously, any terms that, are associated with that. You had jumped a little bit to, why it works in today's market, and I appreciate that because this is a nuanced time. We have had a unique time in our history that we were sub 2% interest rate. I don't ever see those coming back again. That was, a very rare instance. It might, but I certainly wouldn't count on it.
That's where I'm at. Like it's like I said the first time, oh, it'll never get that low, right? And it did. So I don't want to say never, but that
Rarely.
was that. Yeah, that's the first time that we've ever experienced that as a country. So the likelihood of that happening again is slim to none for sure.
Yeah, so you take that interest rate and then you take what's happened over the last couple of years since that interest rate was in play, and that is pricing, values have gone up, and then things cooled when the interest rates went up, and some markets the pricing went down. So usually, and we'll get into the details of what a buyer needs to do, and that's pay the difference of what the homeowner owes on the property versus what the value of the property is. So a lot of times, historically, if people were looking at assuming a loan, that was a big number. You're talking tens or hundreds of thousands of dollars to make up that difference. So not only, yes, you were getting a good rate, but you had to come out of pocket a significant amount.
Yeah, and that's really the key feature. So there, I mean, there's actually a lot more that goes into it, right? And it's a complicated process. The last one that I did took about 6 weeks. So it can take some time. The new buyer has to qualify for whatever type of loan that is. So whether, even though you're assuming something that's already been, through the loan process, you're considered a new borrower. And so you have to meet all the regulations of whatever type of loan that is, right? All the guidelines. And then once that happens, obviously, I mean, the first question that you would generally ask is the difference, right? What you're talking about is the money, because each type of loan has different regulations on what the assumption process looks like and what you can and can't do. So if you have to, if they've had their home for a while and they've paid it down $200,000, or it's increased in equity $200,000, and you have to come out of pocket for that, or you have to get a second loan at today's interest rate for the difference,
Yeah.
right? Those are realistically your two options. Then you have to be able to qualify for that as well.
Yeah, and getting a little deeper into meaning you have to qualify. So if you're already working with the lender, and this is what I referred to earlier, you're going to have to go to the lender that currently holds the mortgage on the home. So you're going to have to get re-qualified, right? You have
Yeah.
to be qualified for the loan that you're assuming. That loan might be, we're talking government backed or secured loans, typically,
For
right?
the most part, yeah. Typically, for the most part, yeah. There's some ARM options and some other, like some trust scenarios, some really like one-off situations, inherited, things like that are also assumable in certain instances with their own set of issues. But typically, like if you're out there shopping in the market and you really want to find one that's assumable, the best way to do that is look for government loans, right? FHA, USDA, and VA.
Right, right. So there's one in particular that a lot of people get wrapped up around or don't quite understand, and that's the assumption of a VA loan, thinking that I have to be a veteran. I don't want to spend a ton of time on it. That's not truly accurate. There's entitlements that the seller could want to use in a downstream purchase that they, would want a VA, a vet, to assume the loan so that they can bring, their eligibility, their entitlement
Right.
to purchase the home and not lose that. So that's not always the case. And by the way, this in large part came up because Chase and I have some clients that purchased a home with us a couple of years back, and now they're, got a promotion and are leaving the state. So, we're helping them with an assumable loan on their home, and we're just getting, inundated with a lot of questions. So this podcast is coming up in large part because of that. So I want to address it. And real quick, because it's easy to interject the numbers here. When I say save tens or hundreds of thousands of dollars, in this case, I'm going to round up a little bit on the sale price of their home and just go to 500,000. They're a little bit under, but if you today purchase or want to purchase a $500,000 house at 7-ish interest rate, that number, the monthly payment, and then let's project the full 30-year term. That is hundreds of thousands of dollars more than if you assumed a loan sub 3%. This one's below 3% in this case. On that same $500,000, the math was just incredible. I mean, it was like, I don't know, 400,000. Anyway, it was a big number.
Yeah, the monthly, I mean, just affordability, right? Like not even thinking of the long-term savings, just the current monthly affordability is incredibly substantial. Trying to remember where their payment was at currently.
It's just under 2,100.
Yeah, just under 2,100, right? And realistically, at today's rate, at a 500 purchase, you're 3,000 to 3,200.
Yeah.
Right.
Yeah, that's a big difference.
Insurance, like that's a monthly. That's a huge difference.
Yeah.
So.
Yeah, absolutely.
It really creates some opportunities that we don't normally get to see. Assumptions, they always have their place, but depending on where the market is, but currently, if these homes are coming up, it is an opportunity like we haven't seen before.
Yeah, and I would say, if you've been priced out of the market, values went up and the interest rates, where they're at, it just makes it so you're not able to afford a home. Come to us, meet up with Chase. Chase will identify, what you can afford and what loan program, and then we can go actively look for homes. And what's interesting is a lot of times homeowners don't know. They don't know if it's assumable, and kind of worse yet, I hate to say it, but some agents don't look into whether it is or not, and if that's a selling, point. Highlight of the home that they're selling. So we can go out and actively look for them that the agent doesn't know, that the homeowner doesn't know, and present to them something unique and saying, hey, I see your home's on the market, but would you be open to pursuing the loan assumption process?
Right. And there's some creative ways to do it for sure. In this market, this assumption is one of them, and it's a really good one. But there are creative ways to still get in a loan if you feel like you're or get in a home if you feel like you're priced out. So you don't know what the answers are unless you ask the questions. And then to your point, the original question that you asked that I kind of got sidetracked on there, or the really original point you were making is if it's a VA loan, it does not necessarily have to be a veteran, right? They have to qualify, right? They will have to qualify for the loan, and it has to be signed off by the Veterans Administration. But there's an entitlement for a veteran borrower, which is, the simplest way to think about it is just probably a credit for that borrower in their home buying process, right? And if they don't remove that loan, like if it's not a veteran that buys the home, then they don't get that entitlement back, right? But knowing the situation, right? Like, are they going to buy right away? Is this a permanent station? Is this, is it something that you can assume for a year or 2 years before they need their entitlement?
Yeah, these particular sellers had 2 years before they would need it back. So there's, potentially an option there, not always.
Yeah, and that's not always the case, but you need to know what the situation is and what questions to ask, and what you can do to get in a home. So there's a lot of opportunity out there still.
Yeah, sure. And in this case, really what we are is the matchmaker. It's, hey, Mr. and Mrs. Buyer, this is your unique situation. Even if you can buy, can you buy smarter?
Right.
So come talk to us. If we can find you an assumable loan that's going to save you tens or hundreds of thousands of dollars, why would we do that? Or, hey, I didn't think I could buy a home. What's this loan assumption thing? the first thing they need to do is talk to you, because there's going to be certain homes that we would go after, right, to see if they could potentially be a fit for you. So you've got to, understand where your buyer's at, and then I'll help
Yep.
match them to, potentially match them to the home. So we just want to get that process started. And
Right. And it's things like, like with the differences, right? So government backed loans typically are easier to qualify for, right? Somebody with lower credit score, or maybe there's some dings on their history. An FHA loan is typically the way that you would go in order to get them qualified. With the veterans assumable, I think probably the biggest sticking point is that they don't allow seconds to cover the difference, right? So those are a little bit harder to find to where they meet, because if it is a big chunk, like we discussed earlier, like 200,000, like, do you have that kind of cash laying around? Not a lot of people do. So,
yeah, yeah. Well,
so
this gets us into the kind of the pros and cons side of things. So that could be, definitely a big con for a buyer, is that they've got to make up the difference. So
yep,
let's use that same $500,000 example. If the homeowners that are selling it had the home for a number of years, and let's say they owed 400,000, yes, you're going to get a sub 3% interest rate for less than 30 years, but you're going to have to make up, the difference between that 400 owed and that 500 value. That's not insignificant. Some people might have it, some people may not. So again, that's us being the matchmaker for you. Now, what I was referring to earlier is their timing, because the window in time chronologically is narrower. That there are sellers that were once buyers that got into loans without a whole lot down, 100% financed, or
right,
97% financed, and the market maybe went up and then went down slightly. The difference, maybe that seller on that $500,000 home only owes 495.
right.
Then now you've got a $5,000 difference with a screaming interest rate, and this is a match made in heaven.
Yeah, yeah. I think, again, to your point, right? The market, and the temperature that we've experienced over the last couple years, where they were increasing greatly, but if they bought at the end of that, right, after things started to temper, they might not have had a ton of appreciation, and so, yeah, that difference is manageable. Or if it's an FHA loan, right? So the different types of loans allow you to do different things. With an FHA loan, you can get a second to cover the difference, right? But then you also have to qualify for that second. So if it's a large amount, like $200,000, then your payment is at today's interest rate on that second. Whereas, again, if it's that smaller amount and you have a second, that makes it easier for you to qualify with that additional payment,
Yeah,
and
yeah.
still make financially beneficial for you and your family.
Yeah. Now, so that's the cost up front, maybe a con, depending on what's owed on the property. There's going to be, some complexity in having to go through this process, right? Because now you're interjected into a brand new lender, because you're assuming it from that lender. So you've got to, jump through some hoops to get qualified from them. But if you've gotten qualified from another lender at a higher interest rate, you're probably, positioned pretty well.
Probably in a really
Um,
good.
so there's some work there. How long it takes for that servicer to process the loan assumption may or
Yeah,
may not be attractive to the seller,
right,
but if the seller's kind of identified what that's going to take, they might know that up front.
right.
Um, so there's just, you know, some difficulty in finding the property that has the
The
assumption.
there is some cost benefit from an assumption. So the lender servicer will typically have some kind of an assumption fee, but a lot of the closing costs, won't be associated. It doesn't require another appraisal. There's a number of things um, that go into it. It doesn't necessarily require a second appraisal. It depends on whether you're doing a second or not, right? So
Right.
um, so there are some costs that will be less. So it could be substantially less expensive for you to go through the assumption process as opposed to closing a traditional loan.
Yeah. Yeah. Well, I would say, yeah, I mean, we could go on and on and on. There's, kind of the devil's in the details type thing. And,
For sure.
you
But
know,
scenario is different, right? And so
Yeah.
you kind of give an overview and an outline, but until you're in that position, you're not really going to know whether it's going to be approved or not.
Yeah, and the last thing you want to do is hear something about this, go out and find a nice, beautiful home that you want to buy, and then start figuring out, one, what is this assumption process? Two,
Right.
where am I at relative to being able to assume a loan in the first place? And then three, is this house and seller potentially a good match? Let's figure out a lot of that before you even get out into the field, so that you're kind of able to buy.
Oh, absolutely. I mean, we beat this, we beat this drum
We
a
do.
lot, but that's always the case, right? The more prepared you are, the better the transaction is going to be, and the more opportunities you're going to be able to take advantage of.
Yeah, if you fail to plan to fail.
Yeah,
I mean, I hate to be kind of the guy that, you know,
yeah, 100% true though.
throws out the
And
cliches, but
yeah, the more difficult situation you're in, the more you need to get all this taken care of up front. And give
yeah,
people all.
just a quick conversation with yourself. You can tell me where you're at as a buyer, and then I can go out and look for these properties. This buyer has X funds to bring to the table. That's the difference in owed versus value. What loan programs make sense and all that, and then I can go out and do the research, the reconnaissance, and bring back properties that say, hey, these work, these don't work, or hey, maybe that niche market that you were looking in isn't really an option. There's not a whole lot of inventory there. But if we look over here, is it worth it to you to assume a loan at a great interest rate, move from one kind of niche market to a broader market with more inventory? So again, just setting you up for success, as
Yeah,
opposed to stumbling through something and having failure after failure, where you just get kind of discouraged in the process and miss out on something that could be, again, a once in a lifetime or a once in a generation, you know, type benefit.
absolutely. And it just goes back to opportunity, right? Trying to create opportunity for people. And it always seems selfish, I'm sure, when we talk about this stuff, Jared, right? Like, it's like, oh, you're an agent, I'm a lender, and that's how we make our living. And it is, for sure. But I am a firm believer, and you'll never dissuade this from me. The first step in families building real wealth is real estate.
Hmm.
And owning your primary residence is the first step for the majority of the public. And it gives you, it's talk about cliches for savings account, like whatever it is, right? But you don't typically get the returns on most investments that you do on real estate. And
Yeah.
so the more people that we can help take that first step, the happier I'm going to be.
Yeah. Well, let's talk about that a little bit, because, this is probably the strongest case of you and I showing that we're more interested in helping the consumer buy a home than any,
Yeah,
because we've already talked about yourself. You're going to talk to people, and you're going to know there's going to be many times where they'll just go right to the servicer of the loan,
yeah,
and no financial benefit to yourself. And one of the reasons why it's such a secret is because not a lot of LOs, I mean, I shouldn't speak for your side of the industry, but they don't talk about it because there's not a whole lot of reason to talk about it. I mean, it's not something you do,
right.
especially on kind of the front end of things. That's a back office, assumption department
Yeah,
function. And then on my side, I mean, I kind of hate to say it, but there is more complexity, sophistication in this research effort, that some agents will or won't be interested in putting in. So um, anyway, I mean, I don't know that that's what makes it a secret, but that's certainly what makes it less talked about.
yeah, I wouldn't disagree with that, right? Like, you gonna, I mean, most people are going to spend time doing, what makes them money, right? We have to, but like, opportunity is opportunity, and if I can help people, right? Like I said before, it'll come back at some point.
Yeah.
I'm fairly confident it always has, and so whatever I can do that's right for the client, I'm all in, all
Yeah.
the time.
Well, we've talked about, what is our perspective on this, and if this was my children buying, if this was, a friend buying, like that's what I do.
Yeah,
You know, talk to
And
my
you'd want
team.
somebody to do that for them, right? You'd want somebody out there like us trying to do that for them, trying to help them through whatever their situation is, for
Yeah,
sure.
I had a conversation. It's been a couple months now, and my heart just went out to her. It was a native mom, had kids getting to an age where they wanted to buy a house, and she was so frustrated because, you know, our home values have gone up so much, and this was even before it had got up into the sixes and sevens on interest rate, and she's just frustrated that she couldn't help her children buy a home.
Yeah.
They just were getting priced out of the market. And then when I see something like this, where potentially, everybody's circumstances are different, they may or may not be able to buy, but for those that we can help, that's just great. I call it emotional currency. This is
Yeah.
heartwarming to help that native Idahoan help their children that are discouraged about being a homeowner in Idaho become a homeowner.
Right. No, absolutely. I mean, it just, I don't know. Yeah. I hate to keep building us up.
Yeah, and I didn't mean to go down that path too much. So
No,
let
not at all. But that's the thing, right? Like that, like it's become, in, I'm in the same position. Like I love what I do for a living, but the biggest part of what fills my cup is being able to help the first time home buyers, being able to help people make that first step to building real wealth and changing their lives, right? And being able to see and experience and be a part of that.
yeah,
I live for that, and
yeah,
it is becoming increasingly harder for me to do that in this state, in this industry, in this current economic weather that we're in.
yeah,
And so any opportunity that we can get to help people, like it's the right thing to do. It's
yeah.
just really the right thing to do.
It is. I have I'll keep this brief, but I have a friend that came from California, spent some time here, and finally got into home ownership. But he looks back, and obviously he couldn't for a large reason being from California and the home prices. So he just couldn't. But now that he is a homeowner, he's super obviously happy to be one. But he's also, wishing that he had figured out a way, again, being in his 50s, to have owned way sooner.
Right.
I mean, that's just, I don't know. I don't even know what to think of that one, but that one's kind of rough to think about.
It's great that he experienced it, but think of all that, like
Yeah.
all the equity increases and over the years and all that, like that's a bunch of wealth that you get to miss out on, right?
Yeah. If
Like that.
somebody had helped him in California do something like this, where he could realized some of the appreciation, equity, brought it with him and bought a house, be in a
Yeah.
much better position.
I mean, you and I have had these conversations before. Like I am, my old man was my hero. Like he was just it for me, and he was a great businessman. Um, but his business, like he never got wealthy off of his business. He ran a floor covering store here in the valley for he and mother did for 40 plus years, and they had a great clientele. But he did not get rich from that business. What that business allowed him to do was to purchase real estate, and then he sold that real estate, and that's what allowed him to be able to retire and live out his dream for the last 8 or 10 years of his life. And so that's a lesson that I was able to learn, and I want to share it with as many people as I possibly can.
Yeah, yeah, awesome, awesome. Well, we've been trying to keep these under a half an hour. We did pretty well. We're at 28 minutes, so
Let's
let's.
go.
I know, and there was a lot of ground to cover too. So we were moving pretty fast. So if for some reason we covered territory too quickly and you've got some questions, let's make sure that you know how to get in touch with Chase and I. You can reach Chase at summitfunding.net.
Correct.
And his information is available. You can reach out to him directly. Just reference that perfect home buying process, or ask obviously about the loan assumption process. We'd be glad to help. And then you can reach out to us on the perfect home buying process as well. Again, in the comments below, or our contact information as at oops, let me go here, myhomeconnection.com. I think I hit there we go. All of our contact information's up here at the top. Maybe if the screen's going to refresh, but they'll have an email and a phone number to call. And oh wow, I guess it's maybe not going to refresh. But anyway, trust me, myhomeconnection.com. gotta love, gotta love technology when it works, right?
It works when it works.
Yeah, and when it doesn't, you shake your head and hopefully
Yeah,
laugh it off.
all you can do. Gotta love it. When it's
Excellent.
live, there's not a lot you can do about it.
Yeah. Well, thanks again, Chase. You're always a wealth of knowledge and got your heart in the right place. So we're excited to help folks out in regards to their home purchasing. And we didn't talk a whole lot about pros and cons for sellers, but obviously, if you're going to be a buyer and you have a home, we can talk about what the advantages and disadvantages as a home seller would be. We'd be glad to help. So.
Yeah, and last and final point, but it's if we talked a lot about first time home buyers and helping those because that's where we tend that where our heart is and where we tend to go. But if you're an investor out there, assumptions are still a great option for you. Being able to cash flow with that lower interest rate, it's a good time to look at those for sure.
Yeah, I got bombarded on this listing from investors. So yeah, they're very keen. I don't know when I've last used that word, but anyway, on assumptions. So, all right, Chase, thanks again, and we'll wish everybody a blessed one. Take care.
Take care.